my other one that I
PayPal.
had was PayPal.
Ooh, I like
This
PayPal.
was on the options report. Nice bounce off of the cluster of the 9 and the 20, which is in blue. Uh,
Mhm.
so I'm looking to play this also on a, on a probably a cash flow for me on PayPal. When I get to these high price stocks, I usually try to do cash flow trades on them if I can.
Mhm.
I'll go directional. Maybe I could do a bull call, but I usually try to see whether I can pick up some credit on these, especially since we have some other great breakouts that we can do directional and go like, with Ally that we could just go straight directional. But looking at PayPal for a cash flow trade, what say y'all?
So on these types of deeper pullbacks, especially in this market where it violates the 9, violates the 20, you always get a little bit more concerned in that environment because you violated some short-term support levels and you're
Mm-hmm.
getting into more zone analysis, right? It's in the
Yeah.
zone, right? You're not an assassin at that point. It's like you're in the zone, but you have really good reward to risk ratio scenarios in that situation. So for example, if you're buying right now 273 and you're targeting T1 at 309 and T2 at 340, you got a beautiful reward to risk ratio in that environment because you got a deeper pullback and you have similar targets, right?
Mm-hmm.
And so you're just getting in at a better price, and obviously the stop will be placed underneath the base there at the 50-day moving average. That's a very decent short-term trade. But whenever you get those deeper pullbacks, kind of coming back to the psychology a little bit, I microanalyze it to a certain extent. And I'm like, well, it violated the 9. It failed that high base. It didn't even touch the 20. And like, I just start over analyzing. And so sometimes I feel like the best analysis is bull call versus bull put.
Mm-hmm.
You dance that dance, bull put versus bull call. And Tim and Am, I want to ask both of you guys, because I know both of you guys like those trades, right? You're both
Mhm.
vertical. You got one on the vertical debit side, the other one's on the vertical credit side. So the bull call being that vertical debit trade where you're still taking advantage of the directional, position you have, whereas the bull put spread, vertical credit spread, you're basically lobbing a grenade saying, well, I like the technical setup, but I really like, selling a $200 bull put spread and saying it's never going to get there, right? So
Mhm.
how do you guys go about making that decision? Because we'll put stocks like PayPal on our watch list all the time, right? All the time.
Mm-hmm.
And some traders will say, yeah, I'd like the bull call side. Other traders will say, I like the bull put side. Some will be like directional. Everybody to each their own. But specifically about you two, how do you go about making that decision in these types of technical moments?
It's a great
Tim, you want me to answer and use your
100%.
analogy that you taught me? It's the 3 C's, right? It's the cushion, the chart, and the cash flow, and you go through
Well,
that process,
as your
right?
mentor, now I'm curious if you can teach that analogy, because that would let me know that you got it perfectly. So I'll leave that one for you in a second. Yeah, the 3 C's of cash flow trading for sure are some of the components, what that goes into, and Emily will expand on that. But do I get enough cushion to make me feel comfortable that the credit I'm receiving, and the chart that I'm reading it on, it all kind of line up together? Right now, this
Yeah.
deeper retracement is developing to where you could get a nice delta move here. I look at the credits in the market. The first thing I consider, Matt, is not just PayPal alone. I don't make this decision in a vacuum. I don't think traders do that, quite frankly. I look at my portfolio, what I currently have. If I have 0 credit trades on, and let's say the debit and the credit are a 50-50 debate for me, I might
Mhm.
lean on the credit side of it if it's a qualified trade. If I
Okay.
have 0 debit trades on, I might lean on the debit side of it. Let's take that out, and
Okay,
let's
but
assume I've got
let's
both in
also
play.
take away what your portfolio needs because you're just making one trade.
Yep, that's what I'm saying. Let's take that out, even though that might go into my thinking in
Yeah.
general. Let's take it out for this analysis. I would then first price the credit spread, because I
Okay.
know I could build a reasonably good debit spread on most liquid option
Well,
chains and make it
especially
work.
PayPal,
Yep.
right?
So
You can get there on PayPal.
I know the debit will work if I want to go that direction. I'm fairly confident I could
All
build a
right,
debit
so let's
spread of
let's map
concept.
let's map out the credit spread here. So 45 days out, let's
Mhm.
sell a. What do you guys think?
I would start at a minimum with that 17 delta at 240, but I would probably go a little lower and even do the 12 delta. I'd be looking in
Let's
there.
start with that one.
The 12 delta, and that's
Mhm.
was that 220?
230 by 220.
230. Really, can we get 225? Can we make 225 work?
They don't got a
We'll
5
try.
strike on that
We
April.
don't got a
That's
5. I'm looking at the chart, and I don't think we can make 220 work.
go back to the trade tab for one note there, Emily. We get $1 on 10 on the 230. On the 220,
You get $1 on 10.
on the 220, we can get basically what is that, 65 cents?
64.
They both would work. We can make
They
220
both
work
would work.
from a Royd perspective.
Oh, the Royd would be fine on. I mean, you're getting 64 cents against a $10, margin there, so that's not great. It's 6% on against margin. The other one's 9% against margin. So obviously you're going to get a bigger credit on the 230 by 220, but both would work on a Royd because you're basically what we're trying to do. Everybody's we're maximizing the range, the cushion.
Yeah.
Right. I think that's the cushion part of the 3Cs because I'm very interested in what the 3Cs are actually.
Go ahead, Emily.
I've made up so many analogies in my life teaching things. I mean, I know Tim probably just made something up on the fly.
I did it in the ballroom a bunch, yeah. And one day I'm like, all right, guys, it's the 3Cs. It's the chart. You've got to have a qualified chart,
Right.
So grading and reading the technical analysis. Go ahead, Emily.
Okay, so the
Yeah,
chart.
so it starts with the chart. Obviously, if you're doing a bull put spread, the chart has to be at least neutral to a bullish trend, right? You wouldn't be doing that on a chart that's going downwards. So you first look at the chart and see where the chart is, and then you start, like Tim said, you start to build out the trade and start to see how much cushion you can get, and if the cushion you're getting is enough for you to get paid. Is it worth doing the trade? And that's why we analyze both. So if we go to the Analyze tab, we ran both, and we did the 230, 220 is giving us 98 cents.
But then the discussion is 230
So
enough cushion?
Exactly. Is that enough cushion? So when I draw this and I draw that line on the chart, that's where my break even is. So am I comfortable with this line? Right. So you start going through that process. Okay, if I'm not comfortable with this, then do I need to go a little bit lower? Right, because if it does pull back and go against you, then that's where you start to have your losses. So then you go back and we build the other one, and we said, all right, well, if we give ourselves a little bit more cushion, and now do that and do the 210, the 220, 210, now that pushes our break even back here at that 210 line. And now watch when I put this on the chart where it will put us. So if I put that to break even and then draw that on the chart, now the line's going to move a little bit further down. So are we more comfortable with the line being here, or are we comfortable with the line being up here? And you go through your process, you calculate your ROI, and then you make a decision.
I don't know if there's enough cushion on PayPal for these credit spreads.
It's in the middle of nowhere. This break even is in the middle of nowhere, so I'm not that okay with it.
Yeah, it's tough.
What's the short delta on the 230?
230 was 12.
12.
And the credit was 98 cents, right?
Call it a buck.
Call it a buck.
Yep.
No, it's not going to work. If the 230 doesn't work, the 220 is not going to work.
Not going to work. Yep.
The ATR is too big. You don't have the cushion. You have the chart. You have your Royd's fine. You're rocking on the lower end on your Royd. It's right around 60, but your ATR difference is only 2.2 against the standard, and that's just not gonna be good enough. You got the chart, you got the credit, you do not have the cushion, and that cushion is so vitally important because you can't diamond hands credit spreads.
Nope.
No, you cannot.
You can't diamond hands credit spreads. You have to make a decision. And so yeah, you can't do it. You don't have the cushion. You only got 2.2 on the ATR buffer against the 30-day number. It's just not good enough for that. If you were getting a 20% ROI against the 12 delta,
different conversation.
Maybe you take that because you're on the low end of the cushion at 2.2. You got to have a minimum of 2. So I think you're just not getting it. The directional trade is the better trade here, and that's why you do the bull call spread.
Well, and as
All right.
from a process perspective, once you can eliminate the credit as a rock star trade, let's say it doesn't come in like this one, then you instantly go to the debit. So I don't start with the debit. I start with credit analysis, then we keep working through, and then we go to debit analysis. Yep.
Yeah, and quite frankly, you go to debit analysis because the credit, there's a reason the credit doesn't work, right? There's a reason that doesn't work, and part of the reason that doesn't work is because the debit side is the better side of the equation.
Agreed.
All right, one more, and we're going to call it a wrap. Zillow. This was also on the options report this week. This is a nice clean trigger above 170. This would be, for me, this would be a directional play on this one here with Zillow, but this is also what I had on my watch list for this week. Breakout above 170, clean trigger upwards. Nice bull call. What say you?
This is interesting. I actually think the credit might be more in play here than it was before, to be honest. But the option spreads have some open chains in that April. It's kind of got me head scratching a little bit on the spread. I like this setup. In fact, when I was talking to Matt earlier, we brought up PayPal, both in very similar patterns, both viable from a directional perspective. The thing about Zillow, I think that's even in this little 2-candle pattern that's a little bit cleaner for today is that you've got a very clear trigger. If you zoom in tight, pretty tight there, you'll notice that 170 level, either on the intraday or the last 2 daily candles, you can find at either location, is definitely kind of creating a nice little new trigger if people missed the entry point yesterday or if they didn't take the entry point yesterday.
I'm not even sure the entry point was yesterday.
Yeah, based on rules.
Right.
Yeah.
I don't even think the entry point was yesterday. I think yesterday was the reprieve that gave you the confirmation that support held at 50-day or the 50-day moving average. You were so tight against that potential trigger, and that 170 trigger, it lines up pretty decently on the 30-minute chart over the last 2 days, but it also lines up with some intraday analysis from last week, and it also lines up with some intraday analysis before the gap out on the positive earnings response, which once again, all of Zillow, think about Zillow. Zillow had a robust earnings response. Zillow's earnings numbers were fantastic, justified the market response, up 33% on the quarter, blew off the top, got caught up in the market volatility last week, and now that support level at the 147 level, guys, that support level is the 50-day moving average, which also coincides with the previous resistance pivot on the daily chart. That is a rock solid support level. Your intraday analysis supports a trigger above 170. I think the Zillow, if you're looking at PayPal versus Zillow, I honestly don't think it's close. They're close in terms of trend and pattern, but the trigger is a lot better on Zillow.